too early to say that we're seeing a substantial cooling in the market. We're seeing a bit of a response to higher mortgage rates. Our anticipation would be that you're going to see prices and sales pick up a bit again in the autumn.
I'm Natalie Danowski, and this is Scotiabank's Midweek Exchange. We explain those big economic issues that could impact your life. Brett House is here to help with this week's topics. He's Scotiabank's VP and Deputy Chief Economist. Hello, Brett.
Hi, it's good to catch up, Natalie.
Good to catch up too. So we just got the numbers from the Toronto Real Estate Board, and they show that sales in June were down compared to May. And even the price of the average home fell about $20,000. So is this a sign really that the market is cooling and it could become a buyer's market anytime soon?
Well, it's certainly too early to say we're on the cusp of it being a buyer's market with prices where they are compared to rents or incomes. It's also too early to say that we're seeing a substantial cooling in the market. We're seeing a bit of a response to higher mortgage rates, which is totally anticipated. We're also seeing people move into the summer, where after a year and a half of being cooped up, their minds are on other things than buying a new house. Finally, I think you're seeing a bit of a supply response where more people are getting friendly and comfortable with listing their homes. Our anticipation would be that you're going to see prices and sales pick up a bit again in the autumn.
So I want to ask you now about something that I personally observed over the weekend. I took a few Uber rides down into the city, and usually that ride cost me about $15. This weekend, though, it was double or even triple. What is causing this? Is it a byproduct of reopening?
Well, I think you're right, but there are a couple of other factors that are in play here. First off, reopening means that there are more places for people to go. And the reopening itself is being driven by the fact that a lot of people are vaccinated and comfortable going out. So you've got more demand for Ubers than you did over the last few months. At the same time, you've got a shortage of drivers and a shortage of cars. A lot of Uber drivers have moved out of the segment and have maybe gone back into training or school. And finally, there are a bunch of Uber drivers who can't get cars. Many Uber drivers borrow cars or rent them from car rental services. And those cars got sold off and moved out of the rental segment in order to avoid dead capital sitting unused.
Okay, good to know. So, what should we watch out for in the coming weeks when it comes to housing and Uber drivers?
Well, there are a couple things we should be looking at. On the housing front, I think one of the most important things is going to be how mortgage rates keep evolving because we are seeing bigger and bigger signs that the Bank of Canada may need to move interest rates up a little sooner than it's been communicating. We think likely by the third quarter of next year. On the Uber driver front, I think what you're going to want to watch is whether cars are starting to get produced a little more easily than the past, whether some of those blocks in the production chains are getting resolved, and what's happening with further reopening as we try to move to the final stages of the reopening process in many provinces.
Right, something that we're all looking forward to. Thanks so much, Brett.
Thank you. It's good to see you. There's a lot going on.
Good to see you too. And we'll have more Midweek Exchange coming up next Wednesday.